Is that the case? How'd you get to those numbers in terms of the airlines and what could potentially be a cash crunch, especially as we see this, if we see this continue to get worse before it gets better?
Yeah, certainly. So, one of the things we did, the analysis assumes all commercial air traffic halts. So under those circumstances, the only revenue coming through would be credit card revenue, which incidentally did not exist during the previous crisis. And in Delta Airlines' case, you have an oil refinery. Well, certainly with oil markets where they are, there still could be some revenue coming through from that. And then when we look at the cost side, you have somewhere 25 to 35 some odd percent of costs that are fixed. So some of that cost can be deferred. And the U.S. majors, for example, have a little bit heavier fixed cost than the discount carriers. So once we get past what the expected cash burn would be in the event that all flying stops, then the next layer of the analysis pertains to how much liquidity on hand do the various carriers have. So the numbers we looked at were statements by and large made in March.
All right, got it. So we're starting to get reports, we're starting to get some headlines that a potential relief package or bailout from the federal government could be something like $50 billion for the airline industry. How much would it take? Would this be enough?
So certainly when we think about, what that means, where the curve of new infections means that we're going to be locked down for a couple of months, or do we see the curve flattening out, which all else equal might imply, a return to normalcy in a couple of months versus 2021 or what have you. So I think the adequacy depends on where the bottom is in this thing, which we don't really know at this point.
So, Stephen, how do you model a consumer return to just discretionary travel, vacation, and whatnot? Are there historical events that you look back to that suggest once something happens, once the infection rate begins to decline significantly, whatever it might be, then it starts to return to normal and it's back at normal levels in, 1 month, 2 months? What are you modeling?
Yeah, sure, absolutely. So this outbreak is so very different from anything we've faced before, but the two things we looked at fairly closely, how did the industry respond to SARS and how did it respond to September 11th? So what I would say in terms of what we're thinking at this point, we see pretty heavy downward decline in 2Q. Probably that's not going to surprise anybody, but we see unit revenue falling almost 20%, which was it was actually as bad as we saw during September 11th. And then in the third quarter of this year, what we're thinking at this point is we'll still get declines on a year-on-year basis, but the cadence of those declines we think is going to begin moderating sometime in 3Q. Now that, of course, is predicated on the view at this relatively early juncture that we get at least a mild return to, or at least the start of a return to normalcy, sometime in June, perhaps, which
Stephen,
we don't know at this point.
Stephen, on that front, really quick, I don't have much time, but operationally, when consumers are ready to fly, what will the experience of flying be like? I mean, we saw after 9/11 the changes in baggage and TSA and the security of the cockpit. What would make a customer want to get on a plane again?
Yeah, sure. That's going to take a while. So first of all, one should not expect capacity to just snap back to where it was in January. That's not going to happen. The other thing that's probably unlikely to happen is what routes would be available. So if the coronavirus data says this is widespread, this all takes a long time to recover. Or is it isolated and we have a couple of hot zones where there'll still be no flying? That would mean in the non-hot zones we have limited capacity. We possibly have an on-board experience where on a six-seat row and an economy class on a plane, maybe they're going to be required to keep the middle seat empty for some modest social distancing to keep load factors at a relatively low level and keep people somewhat separated versus the common flying experience. All that being said, it's going to take months to get back to normal. However, I think the street is going to start to look forward at some point later this year on what seems to be the industry poised to come back and have better gains. So if the street starts to efficiently read into these things, and we have the disinformation, the lack of information, at least largely gone. We think that sets up stocks to react before load factors and demand actually react.